Hello, this is Rick Cortez, and this is the January 2025 update on the Westwood Broadmark Tactical Growth Strategy. We have reduced market exposure in the Tactical Growth Strategy by 20% in the last 4 weeks, and here are the reasons we have done so. Number one, market leadership is as narrow as it ever gets. The chart on your screen shows the top 10 stocks in the S&P 500, and they now account for 38% of the total. That's a record high. Number two, the rest of the market is simply not keeping up with the major market averages. The equal weighted S&P 500 was up 13% in 2024, which is a very respectable gain, but that's only half of the cap weighted. And the reason we're concerned is these divergences don't happen that often. And when they do, they often lead to a market correction to get the market back in gear. Number three, investor sentiment is increasingly speculative. Here is a 50-week moving average of flows into equity ETFs. And as you can see, they have soared to a new high. And finally, number four, market breadth has deteriorated. This is our breadth model, which includes all of the stocks in the S&P 500 industry groups. It is still positive, but it has now fallen to its weakest level in a year. So in summary, we still have a long position in the market because monetary policy and momentum are positive. But these divergences and investor sentiment has led us to get a bit more defensive in recent weeks. As you may know, we don't predict stock prices. We adapt to changing market conditions. Our goal is to provide our clients with a positive rate of return every year, regardless of market conditions. We have done so in 19 of the last 23 years, including positive returns during the 2002 and 2008 bear markets, as well as the 2020 pandemic decline. Also, we have never had a drawdown loss of more than 10% in those 23 years. As always, we will look to our four-pillar process to tell us whether we should get more defensive or perhaps raise exposure in the market. So this is Rick Cortez. Thank you so much for joining me. Please join me in February for the next update.